Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is going to be the weekly wrap. But today we're going to talk a little bit about what happened earlier this week. We're going to review a couple of trades that we have open from yesterday from that strategy session. And we're also going to hit sort of a few different things maybe to look at for early next week. And then also definitely going to break down the gold market, the U.S. oil market, and also going to look at U.S. equities. Remember, it's Black Friday right now, so if you need a place to trade, be sure to head on over to Switch Markets. Check out the Switch Markets special, our partner broker. They've got a lot going on here, 100% bonus, $2 a lot cash back, iPhone 17, or 16, and you've got just a tremendous amount of benefits there. So if you're looking for a broker and you want to get involved right now, today, or I don't know, maybe this goes for the next week or so. I believe this goes for the next 7 days. Pretty generous offers, so if you're going to be re-upping anyways, or you're looking to open a brokerage account, head on over to Switch, and they'll get you up and rolling with pretty much everything tradable. CFDs, Forex pairs, you name it. They can get you going. So good to see everybody back in the room. Let's get right back out to price action here and see exactly what's going on with our trades we placed yesterday. Jeffy, good to see you, Jeffy. Dibble, always a pleasure. Mark Corp, hi, morning, Shane. Big time moves in Bitcoin and Doge over the past 24 hours. Yeah. I mean, it's one of those things that, everything's closed on Thanksgiving Day here in the United States pretty much. And then what happens? You got crypto. You've got crypto. And when you have crypto, you've always got a game. That's what I always say. I say, listen, if you want to trade, be a crypto trader because that stuff never closes. You want to trade Saturday and Sunday, go for it. You want to trade Christmas Day, go for it. It doesn't matter. So, yeah, absolutely right. It was the only game in town really yesterday, Mark, and we saw some big-time moves in there. Dragon 131, good morning. Concerning liquidity sweeps, could we look at the Great Red Pound USD? Yeah, we'll go ahead and look at that. Dre Day, good to see you, Dre Day, over on YouTube. Happy Friday, Shane. Have a wonderful weekend. Yeah, it will be a pretty good one. I've got a college football playoff game we're going to tomorrow night. It's going to be very cold here in Montana. Kickoff's like at 8:30 p.m. my time, so it's going to be windy and cold and pretty much miserable. But when you're from Montana and you like Montana football, you sort of learn to enjoy the elements. All right, so this was sort of the trade that we had on the Euro USD yesterday. You'll notice right here, this is a basic 9 EMA with RSI confirmation. Right there's your RSI confirmation. There you're sort of broke beneath that 30 level, which tells us that we're in oversold territory. We want to buy the market, and right there would have been our buy signal. Bought on a little bit of a pullback. You could have done that as well, and that buy is very simple. The qualifier there, oversold territory, we want to buy, and when do you buy? You buy when you break above that 9 EMA, and right here, pretty much nothing's happened. This is at scratch. Does not surprise me, none whatsoever. I think that if you look at that trade during a holiday session, even today's considered a holiday session, although we do have an open on Wall Street. I believe it's an early halt, though. So we're going to look at U.S. equities here in a second as well. But there is going to be a lot of things that we need to be ready for early next week. And we're going to talk about the news cycle as much as I don't want to. It's more bad news. But we got to do it because we got to be ready as traders. So Euro USD, one thing I did want to point out on this trade, okay, so you'd be holding longs right here. Got a lot of questions about the 920. Is the 920 better than the 9 EMA? In my opinion, it gives you, yeah, I think it is. I think the crossover strategies I like better than just the naked moving average strategies. And when you put in something like an RSI, which is what we're rocking down here, you're up above 70. Look at what you have here. You're in overbought territory, so you're looking to sell the market. Well, take a look at what's going on here. When would we sell there? Overbought, we want to look to sell. When would we sell? We would sell when the 9 crosses over the 20. And look where it crossed. Didn't quite cross over right there. We looked at this one the other day. Fascinating stuff. Didn't quite cross right there. That kept us out of trouble. What happened? We rallied up. We took a look at these, really this supply zone up here, this order block, and then we saw the big-time sell-off. Where would have been your signal? Right there. Overbought. We're still in overbought territory. We're looking to sell, and there's the first crossover after your signal right there. There's your qualifier. There's your signal. And I'll tell you what, when it comes to moving average trading, that really is what you're looking for. That's a major move. That's a major move. So even though a lot of the scalping strategies can be a bit unreliable, especially say on a 1-minute chart or a 5-minute chart, if you get into those dailies and you get great trade location, this is what a lot of institutional investors do. They wait for that market, that market dynamic to shift, and they say, okay, we're in a bear market. Now, the difference between them and you is they have more money, clearly. They have more money than me. They have more money than everybody. So they can afford to take a look at something like this and hold it forever, really, until you get that other crossover, which I think is coming. So do I feel bad about being long here against this trend? Not really. Just understand that we are fighting the trend. Your stop out point's probably beneath that. I wouldn't go that deep on this trade. I definitely would cut this thing off right beneath that doji, but we'll just see what happens. We'll see how this develops. We had some interesting news out of the EU earlier today with inflation that is sort of beginning to recede. We saw some preliminary CPI figures out of the EU, and we'll talk about those in a second. USD CHF, this was the other trade that we had. This one's faring a little bit better. This is to the short side of the market. Very simple. This is a very simple strategy. What is it? RSI qualifier. RSI, Relative Strength Index, goes up above 70. We're looking to sell. We're in overbought territory. We want to sell, sell, sell. And then right there you have it. There was your sell signal. You got that nice big close right there. You'll notice that our entry point is right up here because remember, you have options on your entry. You don't just have to sell on that close. You can wait for a pullback to the 9 EMA to sell, and that can get you on the right side of the market with a little bit better trade location. I don't really have a problem at all with this trade just yet. This is nice symmetry. I think I would much rather favor the Swiss franc going into the weekend news cycle. I think that it's a dangerous weekend to be holding really anything but safe havens, but I say that almost every Friday, so I'm predictable. I'm definitely predictable. All right, Dragon. Yeah, let's go ahead and look at this Great Britain Pound USD before we sort of get on to the Fibonacci's and all the stuff that we're going to do to break down the markets. Great Britain Pound USD, let's just keep our 9 EMA trade up. What do we have? Similar. Oversold territory, so you're looking to buy. There's your buy right there. There's your buy right there. So if I was looking at the Great Britain Pound with, in accordance to this 9 EMA with RSI, you buy right there. You'd be buying. Now notice that you're pretty much doing the same thing across all the majors. You're playing against the US dollar right now. Is that a good thing to do? I don't know. The dollar's been pretty strong. Does this system, though, does this strategy give you a chance maybe to get in there and do it with a little bit of confidence? Yeah, absolutely. Now you'll notice that this Great Britain Pound, if we switch on our 20 right there, there's our 20 EMA. What is it? It's essentially the same trade. Look at this, though. I mean, really just a beautiful trade right there. There, you're in overbought territory. You're looking to sell. There's your crossover. Take a good look at where you're at, though. Top of that market. There's your supply zone up there. Bang. There's your crossover. And, I mean, you're rocking and rolling and made a lot of money on that. So pretty much all the majors are showing us, at least with the USD being a counter currency, they're showing us the same type of trade. They're saying that it's time for the USD to relent a little bit, and maybe we're going to get a pullback into November's range. Now, what I want everybody to remember here, December's trade. Monday's the first trading day of December. We talked about the silver market yesterday. Be very, very careful on those previous month's highs and lows. We put out a key levels video on YouTube. You ought to check it out because those previous highs and lows will bring participation. And boy, when they bring participation, you got to be very careful because you could get a major washout. I'm especially watching silver. So as far as the Great Britain Pound USD, if I was interested really in trading this thing, according to what I do, there's a dollar CAD. We're going to look at that one in a second. But when you start talking about, okay, what's going on in this thing? Well, I mean, there's a lot going on. I'm a firm believer in markets have memories. Absolutely right. So if I was looking at this monthly chart and I want my macro zones, spike low there. All right, there's one low, spike low there. So what is this right here? You'll notice that that's going to be probably, what is that, 2023's lows right there. So you've got a series of zones that may, draw bids. But make no mistake, the last 2 months have been negative. Right there, you'll see that there you've got to November of 2023. That right there is 2024's lows, April. Are we looking for bids down there? Probably right around 123. So do you want to be long or short right now? You could definitely justify the short side of this market. On the shorter time frames, though, I probably would be looking to potentially bid this thing. But if you wanted to, in fact, sell, I mean, take a good look. You sort of got a failed auction going right above last week's high. If I was looking maybe to trade this thing according to my Fibonacci's, high right there, spike high, spike low, and what are you doing? You're sort of milling around in the woods. You got compression right around 127.05. What's this week's high? This week's high right there is 127.49. I mean, in all actuality, it's not a bad short. Take that short that's sort of lined up with that 920 EMA. It's not horrible. It's just your trade location isn't very good. So, if you wanted to short right now at 127.05, you could. The problem is you're going to have to put your stop loss up above that 127.50 area. So you're going to be risking 50-something pips, which isn't a bad risk. I think that there's a very good chance that the USD is going to potentially surge a little bit going into next month. but we just have to wait and see how December opens. Remember, the last trading day of the month and the first trading day of the month, those are big time. Those are big periods for institutional traders. Those traders, that they judge their strategies. We're using all the technicals and all the savvy we can to make these trades as cheap as we possibly can, meaning limit our risk. But the institutions, the Soroses, the Buffetts, I don't even know if Buffett trades Forex, but I know Soros does. Those big things, the quantum fund, those big players, they don't care. They're not into technicals. I mean, they'll look at them, but they say, okay, it's the first day of the month. What's going to happen this month? Well, we believe all the election uncertainty's out of the picture now. We think we're going to get a Fed rate cut and maybe some dovish guidance. And then what would happen? Then they would all play against the U.S. dollar, and they would do it for a month, 2 months, 3 months. Don't ever forget your calendar. Our economic calendar we're going to look at in a minute. That's one thing. But your actual calendar, hugely important. That's when the action comes in. Last day of the trading month, it is Black Friday, so it's like, you're probably not going to get the moves you would think just because it's a holiday. But Monday, first trading day of December, I mean, we can already just pull up. Let's go ahead and look at the DXY real quick. What are you going to have? What's the biggest number on the board going to be to open next week when December opens? That's going to be absolutely huge. Last week's low, you got to look at that. Let's go to the monthly. Now, this is good stuff right here. This is very instructive because do we really think we're going to trade up above 108? Probably not. And there was a lot of folks that dug in up there and said, nah, this is the end of the dollar. We're going to play against it. And now you're starting to see that rescission that all of our short-term, like our 920s, stuff like this, starting to tell us, or our dailies, starting to tell us that, yeah, maybe the tide is turning a little bit against the U.S. dollar. So be very careful to open next week. I know I always say that, but be very careful because this dollar index looks to me like we're just going to rotate around right in this order block. So how would I be trading this thing? Very simply, I would pull up my weekly chart. We got a clear-cut, really great market structure here. I would be looking for a washout beneath last week's low and step up a bid in the back end of that golden zone, 62%. That's a pretty good area. 105 and a quarter maybe, somewhere right in that zone. I like that. I think that's going to give us a good chance to succeed. That's if you're trading the DXY. And, of course, each one of the majors is different, so you got to sort of beware and stay frosty and be ready for a little bit different dynamic in each one of those currency pairs. All right, we did have some things on the economic calendar today that are worth talking about. The biggest, in my view, was going to be your EU CPI. Now, this is fascinating stuff. EU CPI, these are preliminary numbers from November. So nobody get carried away. Remember, the preliminary numbers carry a lot of weight, but they're typically all revised. And when we revise these numbers, then we often get a much different picture of what's going on in the market than we first thought. So right here, this is a bold number. Look at this. Month over month for November, EU CPI came down negative 0.3%. Came down. Now, previous level was 0.3%. We came down negative 0.3%. That's a big deal. We're not seeing that stuff happen in the United States. We're not seeing it. So when was the last time we got a negative month-over-month CPI print? I can't remember. It hasn't happened. So in my view, the inflation's entrenched, especially here in the United States, but that is fairly good news out of the EU. EU CPI looks pretty darn good. I mean, what we're looking for is a retraction in inflation, and we just haven't seen it. So that's interesting. We'll see if that's a trend. Next week, we've got some key economic events here in the United States. You got BOE Financial Stability Report, BOE meeting minutes. You know, we're not going to cover that today. Bailey speaks, all that jazz. In the United States, nothing's going on today. This is a Fed's balance sheet, doesn't mean much. Manufacturing PMI out of China. Maybe we could talk about a global recession potentially. People are going to really start trying to figure out what's going to happen in that trade war next year. We all expect a fresh U.S.-China trade war. I don't know that it's going to happen. We just got to wait and see. Trump's fairly committed to tariffs, though. That's pretty much all we're hearing on the market. So China probably needs a strong number. This one right here, the Canadian dollar, Canadian GDP, sort of seeing a bit of a growth. I would say month over month it's a growth, but you definitely missed expectations and things are starting to stagnate. So remember, North America, a lot going on here. We heard the Mexico, the Mexican premier, she was popping off. I use that, she was popping off against Trump saying, you tariff us, we'll tariff you. We've heard it all before. Typically, the tit for tat tariffs are going to be very limited because it doesn't do anybody any good, especially especially on the American continent between Canada, Mexico, and the United States, you're going to see a new trade deal, and you're almost going to see it probably in the first 100 days. And the real question is are people going to sign on to the trade deal or aren't they? So for something like a Canada's GDP, traders are watching this very closely right now. Now, I don't know many traders that are trading Canadian stocks. I believe it's out of the Toronto Bourse. I don't know of that. I don't know if anybody's trading a Canadian index, but they are trading the loonie. And the loonie, for a long time has sort of been in rotation. It's been sort of a very slow market. You'll notice our compression right here. I mean, this is no joke. This is a long-term chart going back to 2022, and I mean that is just rotation. It's choppy. You're up. Look at all the wicks. That's ugly stuff. It means you're not trending. That right there, that's a breakout trend. Don't be surprised if you see maybe another one of these coming. Now, is the U.S. dollar going to rally tremendously against the Canadian dollar? It'll be a function of crude oil prices. Believe me, the tariffs and the trade stuff, that's also going to play a big deal in our Forex. So our job just got a little bit harder because we're going to have to deal with trade wars. We're going to have to deal with tariffs, but we're going to deal with all that as the news unfolds. And our technicals are going to really help us because a lot of these fundamentals, it's very, very everything's theoretical when it comes to tariffs. Now, I've heard guys out of Wharton's, guys on CNBC, analysts, men, women, whatever, that are all saying that tariffs are going to spike inflation through the roof. It didn't happen during the first Trump administration when they placed big tariffs on a lot of different things. So a lot of folks that are saying that don't believe the hype. We've got to wait and see because this is a dynamic situation. I won't even venture a guess of the aggregate impact of tariffs on the U.S. dollar or these majors. We just fall back on our technicals and we trade the action. Now, as far as what we got going here, there's your high from October of 2022, and there's your high right there from the August of 24, and we sort of saw that triple, almost quadruple top in there. Once we broke above that, we really took a bullish stance towards the dollar CAD. So for me right now, it's relatively straightforward. If we wanted to trade a macro level, we could use our monthly charts looking for our macro support zone, which I like my monthlies. I like my weeklies as well. You could be looking at something like 138.84, something like that. That may be one to watch as we roll into NFP week next week for the USD. Let's see if we can build something just a little bit more, not necessarily active, but let's see if we can find something that can get us into the market potentially right now. So this is interesting stuff. I mean, essentially that was our breakout, sort of a nice doji right around that monthly triple top, and then we broke. So now what's happening? That's an ugly week right there. You sent up sort of a long tail, and you've got that hammer, that inverted hammer sort of setting up. That's sort of a reversal signal. I don't think this market's going much of anywhere. I really don't. A lot of uncertainty surrounding the future of U.S.-Canada relations. It's no secret that Trudeau in Canada has been under big-time fire from a lot of critics. They believe I believe he's going to run again. There's an election coming up this year, I do think. But there's a lot going on in Canada. And remember, fossil fuels are huge, about 7 to 9% of GDP. And remember, those oil exports, about 90+% of them go to the United States. So there's a lot going on with the loonie in this coming year. I expect it to trend. Whether it's up or down, I can't really tell you, but I do believe it's probably going to be up. I expect this thing to break out and start trending a little bit, and that's sort of what we've seen really going back to the pre-election era there. So bang, there's your nice big rally. What do you want to do here? This right here is pretty good stuff. If you wanted to bid 139.54s, you could. 78% down here at 139 even. I think that gives you a much better chance. So if you wanted to be aggressive, you could bid the loonie from right there, 139.54. If you wanted to be more passive or maybe more selective in your trade, I don't really like the word passive because it suggests that you're going to sit on your hands. I don't like that. I think that we're all aggressive in basically in life in general if we're traders. But if you want to be more patient, I think is probably the better term. 138.94 would be your level, and I'd be looking to get in there probably 139.09. And the reason why I would wait on 78% is because this is sort of ugly market structure, but it sort of screams rotation. Like, I don't think we're going to get a big crash in the loonie. I would be very surprised. I think that price could definitely just creep down. I mean, look at how tight this is. You've got 141.75 up there to 138, so you only got about 350 pips in there. So that's nothing for a month. Potentially, if we get a sell-off there to begin December, this could be a really good trade. So I'm taking a look at that. Ugly market structure, sort of screams bullish rotation. We're up. We've got the uptrend going. Now we're going sideways. That's a pretty darn good bid if, in fact, you're looking at playing the loonie. All right, guys, we got a couple more markets to look at here that are sort of important. As far as, what we've got, it's been a rough news cycle this week. There's been a lot going on, really a lot of blustering, a lot of bravado, a lot of people, politicians really sort of putting everybody on notice that the Russia-Ukraine situation is escalating. And that's been our number one story this week. I've covered it all week long. And there's no question that tensions, I would say, are at all-time highs. Even though you've seen a war for 1,000 days, it feels like we're evolving into the next phase of this thing. And what I mean by that is you've got big-time attacks right there. The lights are off still in the Ukraine. You saw that massive attack knock down the power grid to about 1 million people. That's a big time escalation. That's something that really hasn't been done yet. Knocking the power grid offline in a really a comprehensive or at least a regional fashion. That's one of the biggest fears here in the United States. Everybody talks about how outdated and antiquated our power grid is here in the States, and that's usually the number one thing the counter-terrorist people point to. They say, listen, the biggest attack will probably be on your grid. Now, the other one's on the internet, and we talked about those transatlantic sort of undersea cables that run from the East Coast of the United States to Europe. We talked about those being incredibly vulnerable as well. It's just the water's really deep, but we saw cables get cut earlier this week. So a lot going on here. Internet and power are a big deal. And it really, if you're knocking down a power grid to a region of a country, you really are starting to, I would say, I won't say divide and conquer, but you're definitely moving in for maybe a larger offensive. That's what that looks like. That's infrastructure damage in a big way, large-scale infrastructure. If you talk to folks that war game things for a living, that's one of the first things you would do, before you would make a bigger move. Now you can see right here yesterday, Putin's still threatening Kyiv decision makers after striking the energy grid. There was talk of a new missile and all this stuff. So essentially it's war. War's hell. We all know that. But this is interesting today. Thanksgiving Day, you have the Biden administration making a statement, an official statement on Russia's attack on the Ukraine. You don't see many of these. But this came out yesterday. Basically, it was the United States government condemning the attack, which should really go without saying. But the official response on a holiday, with Biden being, pretty much most folks believe he's incapacitated. Who wrote this? Why did they write it? And the timing of the presser coming out on Thanksgiving was definitely interesting. So overnight, Russia carried out horrific aerial attack against Ukraine. Ukrainian authorities report that Russia launched nearly 200 missiles and drones against Ukrainian cities and energy infrastructure. That's an escalation. Any way that you slice it, that's an escalation. So when we're thinking escalation, we're thinking weekend news cycle, we're thinking holiday trading, what can we really believe is going to happen to maybe something like your safe havens? Well, we talked a lot about silver yesterday. We wrote up a great big, I won't say dossier, but we wrote up a great big piece on it. We posted it all over the internet. A lot of you really liked it. Others are like, well, whatever. This is key right here. Really a good look at the monthly dynamic facing silver. On the back of all this escalation, silver's up about 1.5%. Not the biggest move for silver, but still a pretty solid move to the bull. The biggest level in this market is going to be this monthly low. So remember, to open December, if you see price sell off and wash out that zone down around 29.72, we're not just going to go a little bit lower. We're going to go a lot lower. There's a lot of compression right in that area, right above that 62%. And I'll sort of show you. There's your daily. I mean, look at that. There was really a hard test and a great trade there. And then yesterday you had that hard test and another great trade, but a lot of compression right above this area. Remember, horizontal support levels and resistance levels, they don't last forever. A good thing doesn't last forever. Eventually these areas get saturated, and when the market breaks, boy, does it break. Boy, does it break. So interesting stuff right there. If I was trading this, I would be hyper-focused there. I may even be looking to sell right beneath last month's low, selling right beneath November's low and looking for that big washout. That's not a bad breakout play. Those are trades that, the first probably 3 or 4 years of my trading career, I focused on being a breakout trader and identifying what are soft spots in the market. And you can definitely see that that's a soft spot. Pretty good void. You can see, look at this massive rally we saw back in September. We could easily fill that chain in and really sell off. I like that order block down there as support. We talked about exactly where to look to bid this thing. But, as far as what I would be looking at right now, breakout sell could potentially be pretty good. So I'm watching that one closely. I think the silver market's definitely going to be in play for December. I don't see any way around it. Gold, everybody wants to know about gold. Not much has changed for us in the gold market. 0.65%, something like that. Spike low, spike high. What do you got? Pullbacks right there at 24.81. I've talked about that level forever. It seems like I don't know that we get it. Now we're up around 26.55. So do we want to buy this thing? Our trend is still bullish. We sort of saw a post-election correction after all of that uncertainty left the market and Trump and the Republicans sort of swept the election. All that uncertainty really left the market, and when uncertainty leaves the market, you do see a sell-off. But we've got fresh uncertainty. Now we've got Fed uncertainty. We don't know what they're going to do over the intermediate term. We believe we're going to get a rate cut in December. More than likely we will, but we just don't know for certain. And then also after that, the rate cut cycle in 2025 is highly opaque. We have no idea what they're going to do. None. So you take that, you take the Russia-Ukraine escalations and all that. What does that point to? It points to bullish gold again. So long-term trend still very much intact. Right now we're just sort of looking for a way in. And you'll see right here, okay, you've got sort of a big weekly. Yes, last week was a big week. This week, not so great. Let's go down to our daily chart and see what we can do. It's really been a challenge this week. I mean, you can see the impact of holiday trading is definitely tough. We went right down to 62% on Tuesday, and we bounced off of that. I believe we outlined that on the live stream. But for right this minute, what you have is just really a lackluster Wednesday, and you've got a tight. That's just holiday trading. Now you're starting to get the bullish break. If you want to go long, you could go long right here from 26.50. I don't recommend holding anything over the weekend, but if in fact you wanted to trade it right now, today, spike low, spike high. %, maybe a pullback down here to 26.46. But you can see we pulled down right down to that daily 26.51 area. That was probably your trade. If you want to get long and sort of scalp this thing today, I would wait for a retracement back down to that zone or down there. But I would also be very wary that it is Black Friday here in the United States, and it's still very much a holiday. We're not seeing really much of anything develop here. Our markets are very slow. Let's look at one last one. We'll go ahead and look at this US 100. We were talking about buying dips earlier this week. As far as, what could you really target here today for a scalp? Be careful with that early halt. You could get into trouble. I would stay away from this. Very, very tight, very compressed market. I mean, if you wanted to sort of do something on an intraday, we could dial it down to a 30. I mean, you guys can see exactly what we've got right there. Opening bell, ding, ding. There's your rally. You sort of broke above that upper Bollinger Band. But for right this minute, maybe 20,000, 847, somewhere in there. You could take a bid. But I would be very careful doing things like that today. I mean, it's not the day to do it. I would much rather save my cash and show up Monday with bells on. I think you'll have a better opportunity there potentially to have a big week and maybe make some real money as opposed to sitting here trying to fight with definitely limited liquidity. All right, let's look at one more futures contract here. Let's go back to our 9 EMA strategy here. Let's go with a 920. Let's go to NASDAQ futures in Q. Let's go ahead and get all that stuff off the board. We also want to dial it down. We're going to dial down our time frame. Let's go to 5 minutes and see what happens here. Okay, right there, that would have been your bid showing up to the market right there, opening bell, ding, ding. So that crossover right there would have been your long. I don't particularly like that. I would be looking to focus right now, and I think this could be a pretty good trade for you. If you're trading E-mini NASDAQ, what do you got right there? You've got it in overbought territory. That's above 70 on a 5-minute chart. So what are you waiting for? You're going to wait for this 9 EMA to cross the 20, and then you're going to sort of take that short into the halted close. I just don't know that you're going to get enough volatility today to trade crossovers or EMAs or moving averages. I think that's probably going to be a challenging proposition. All right, everybody, I want to thank you for joining me this week. We sort of took it easy on the price action today. it's not the best day to be trading. I highly recommend everybody sort of be patient with what you're doing today. You don't want to get in here and take a risk on a day where the liquidity just isn't there. And I believe we're also looking at an early halt on Wall Street. So that's definitely what I would recommend if you're in the market trading today. All right, remember, this was about it. I'm going to go ahead and meet with Connor right now, see how he's doing. Go ahead and give him the official sign-off, and that's going to be a wrap. I've already got next week's streaming schedule up, and so it's just going to be me in the saddle for right now. And once again, we're evaluating all alternatives for what we can do with the streaming schedule to give you guys the best coverage that one person can. At this point, I left it the same. We're just going to do mid-session briefs next week, but we do have NFP Live next Friday. We will have that for you live, and then after that, we'll be doing our best to cover all the big events. So even though it may not work exactly the best for the European session right this minute, everything's always available on demand, so feel free to watch it whenever you like. All right, everybody, you guys have a fantastic weekend. Trade the action well, and we'll talk soon. See ya.